morning for CannaVest East. We're kicking off the day with exploiting ground floor valuations and family office cannabis investing 101. We have with us our moderator, Stephen Saltzstein from Force Family Office. We have Aaron Rosenberg from Vlasic Bioscience. We also have Brett Finkelstein, founder of Phyto Partners, and David Engel, CEO, President, Full Moon Real Estate Investments and Full Moon Investments. And please enjoy.
Good morning. My name is Steve Saltzstein, and I'm the CEO of Force Family Office. Now, look, we're going to have a fun and robust conversation about the state of the cannabis industry and hopefully how to find some value if you're considering investing, or what should you do with your portfolio companies, et cetera. Just quickly on Force, we're the largest network of investment-seeking family offices in the U.S. And basically what we do is bring our families together to share intellectual capital, best practices, but ultimately we bring them together in the context of co-investing, and then we bring them opportunities. And we typically find ourselves at some of the best, events and conferences where basically the smartest people in the country presides, basically trying to meet our families so that they can really come away with an education. So I am very excited to have our panelists introduce themselves. So Adam, you're the mystery man, so why don't you go first?
Thank you. I'm Adam Rosenberg. I've been in the cannabis industry for about 7 years as an owner-operator, but also working with funds and family offices and high net worth individuals on deploying capital in the cannabis space. I was previously with the ArcView Group and Trust Capital here in New York, and I currently work with a variety of families, namely the Vlasic family, which is the same family behind the largest pickle company in North America. And we've invested in a variety of deals ranging from plant-touching operators to pharmaceutical companies and ancillary companies as well.
Thanks. Brett?
Hi, my name is Brett Finkelstein. I am a co-founder of Phyto Partners. Phyto Partners we launched in 2015 as more of a venture vehicle for investors to join the cannabis movement. To date, we run 2 funds that are close to new investments from 2015 to 2020. We invested mostly in the ancillary, non-plant touching ecosystem of cannabis. To date, we have about 22 companies in the portfolio, ranging from everything in the value chain of what today is a cannabis economy, so things like lab testing, seed-to-sale tracking, POS systems. We continue to be active in the growth of those portfolio companies and the industry. And to date, and I joined recently one of our largest investors who's been doing some stuff in the cannabis world as a single family office, and we've been investing in mostly fintech assets, as well as like one-off or two-off real estate or debt financing in the cannabis world.
David?
I'm David Engel. My company is Full Moon Investments and Full Moon Real Estate Investments, a recent addition to the companies. I started in the cannabis space in 2014 in Washington, D.C., and have funded approximately, since 2018, about $135 million in cannabis space, a variety of asset types and structures. So we're trying to figure this thing out like everybody else, and I think we've got some great ideas going forward.
Thank you. So I've been daydreaming about the cannabis industry. I've been on Wall Street for 30 plus years, and I've seen boom bust cycles several times. I mean, I had a front row seat for the dot-com crash. I've watched the nanotech industry soar to incredible valuations and then crash down to earth. Recently, we've seen the EV industry, do a similar thing, and I feel like we're in the middle of this kind of ebb and flow in the cannabis industry. And I was just thinking, is now the time is there enough value in this industry for someone like Warren Buffett to come in and clear the decks, right? And I don't really mean Warren Buffett himself, but someone who's a real value investor. And yeah, I was just wondering, do you guys think that we are at a point of capitulation, the value is there now, or are people still chewing through their cash and we haven't cleared out all the inefficient business models?
I'll take it. It's best of times, the worst of times. Analogies like that, it's so bad it's good. I don't believe that, like, we hit a bottom. I don't think that, I thought the bottom was in February of 2021, and if you look at, there's different kind of data and analog that you might use for an investment. Maybe it's the stock price, which, data shows that, 80% down from the highs, 30% down from this year. I think that now the industry is at a point that, we need some wins. We need some wins that people are waiting for on federal level. I think when we started this investment funds, there was, a handful of states. Again, going back to the data, I think, alcohol is down in certain states where there's legal cannabis markets. I believe that today a lot of the regulatory risk is out of it. I just think the lack of capital, things that never happened on, safe banking at 280E. I think the industry needs like some sort of small win to push over the line that gets new investors in. The investors that are in the space now are tired. They have fatigue. The passion, exuberance on the retail investing side has waned because it's tough to get capital out, and even the custody issues for public companies. But I do believe that a lot of the things that are happening, and again, state by state, year over year, the industry is not going away. And I do believe now, if you're on the sidelines and you wanted to invest and look at the industry, obviously you have to do deep due diligence, but it's a better time now because of the valuations of the market. And again, when we started investing in the space in 2015, there was not a lot of public companies, and the price differentiation or the value differentiation between public and privates were, publics were here, privates are here. Now they're really on par, so you do get some limited liquidity. Public companies do report to investors and the SEC. So I think you have some sort of guardrails on that, but I do believe now that is a better time now entering the market.
Well, Warren Buffett, just like all other institutional investors, is on the sideline, which is one of the key contributors to the stock prices having dropped around 90% since their high at the beginning of 2021. And assuming Warren Buffett could invest, I look at it as one of my favorite quotes of his, which is that in the short term, the stock market is a voting machine, and in the long term, it's a weighing machine. And clearly, with the impatience of progress at the federal level, the votes are all going in a negative direction. But in the long term, the value that these companies are generating and the brand equity that's being created is extraordinarily valuable, and the prices don't currently reflect that. So while it might not be a time to go all in, I certainly look at this as a point in time when sentiment is at a very low point, and it'd be a great time to take a position within the industry. And if we still are not yet at a bottom and it continues to decline, that just means more opportunity to lower your price average.
Let me further the question for you, because you're an expert on international markets.
I assume, I say I am.
Okay, fair enough.
Yeah, okay.
Well, there's, I've been following the Canadian market, and I understand that they actually did go through their point of capitulation, where they're starting to get some pricing power now after bankruptcies, M&A, et cetera. What do you think it's going to take for the U.S. market to get to that point? So, and listen, you don't have to pick a bottom, right? I mean, if you look, at what some of the folks have said, maybe dollar cost average in, but how do you look at the Canadian market versus what's going on in the U.S. right now?
Well, the Canadian market is not a good example because they're still moving, chairs around the deck of the Titanic. Okay.
So you don't think
No,
it's done up there?
These are the charlatans that started this industry. That's what we're working against, right? They're you look at all those companies, they're deteriorating, swooning, 8% a day, 10% a day kind of thing. So I don't think any of those companies are going to make it. Okay.
But it's funny. I mean, if I think about the dot-com bubble burst, right? If we were to have this conversation about the dot-com industry in 2001 after the crash, someone I'm sure was on stage saying the exact same thing about that industry. So when does the phoenix rise from the ashes?
Well, I think it's fundamental business, model that they have. That's the problem. That they don't have a business model. So I'm not saying there's not values in some companies in Canada. I'm just saying that the general mode of canopy and Tilray is a losing proposition. There's probably some stars in the mix, but it's there's too much like fake news,
Right.
with what they're doing.
So let me ask you guys, which is, where are you putting your money now? Where are you advising your clients to put their money now, or is it just wait on the sidelines? There's just so much more pain to come.
Well, as my fellow panelists mentioned, there's been a correction of private equity prices closer to what public entities are trading at. And I think that creates a greater opportunity in the public market, having the advantage of liquidity and being able to quickly shift and adjust positions. While there is a trade-off with private equity being able to add additional protections like preferred payback and liquidation preference and collateral, when it comes to my general investment principles now, I think there's a lot of value available in the public markets with the protection of liquidity. So in the private markets, typically my focus is on investable companies that are making a positive impact beyond just the return. So whether that be companies that are developing therapeutics that have a potential to heal a lot of patients, or other advancements on the therapeutic side of the business, that's really where my primary interest lies, because capital, certainly can be used to create more capital, but at the same time it can be used to make a positive impact on the world. And I think cannabis is a phenomenal vehicle to do that.
And when you say therapeutics, are you talking about biotechs going through FDA approval, or are we talking about more over-the-counter, let's just say, for lack of a better term, holistic cures?
I look at, with consumable cannabis, 3 distinct segments. One is the recreational, then there's the over-the-counter supplement market, and then the prescription pharmaceutical market. And of the 3, the largest addressable market and the highest potential is on the pharmaceutical side, being able to command much higher prices through insurance reimbursements. And I also think, and similar with other therapeutics, that that's really the way to disseminate this medicine most broadly, is to have it going through pharmacies and through physicians. And by no means should that industry interfere with the over-the-counter options or the recreational options that are being made available.
And within those, let's just call them biotechs, within those biotechs, what areas, what cures are they going after? Is it cancer? Is it neurological diseases, et cetera?
Cancer is always a difficult one to study, and Marinol, which is synthetic THC, has been FDA approved for chemotherapy-induced nausea since 1985. So our focus has been in conditions that currently have treatments like opiates that have major downsides. Those include diabetic neuropathy or osteoarthritis. So my focus on where I believe we can make the biggest impact is in creating therapeutics using cannabis that are superior alternatives, or at least superior first-line treatments for conditions that currently have a lack of quality medical options.
Brett?
Going back to the first part of the question, I think now, from when we entered the space till today, we look at things with a wider lens, and we might have certain parameters that might be an M&A transaction, might be, a bolt-on, but I think right now, new capital coming into the market is getting pref returns, things that we would put on in a term sheet at the beginning, follow-on rounds. We want to see, a great management team, obviously, that we look at. We're not chasing kind of deals and shiny objects anymore. I mean, hopefully that we never did that before, but I think the industry was full of that. We chase management teams and people, and we want our companies to focus on that one important thing and keep that one important thing the most important thing. And I think people get distracted, and founders get distracted about where they believe the market is going and how big the market is going to be, fueled by capital. I hear things like now when I see earnings reports or companies coming on analyst calls and saying, you know what, we're going to focus on profitability now. I mean, these companies took capital from investors, and these are things that they should have been paramount on keeping that capital, investing that capital in people, in products, in building the greatest leadership team and board of directors with unbelievable leadership qualities, and I think that lack of that happened early on in cannabis, but focused on now, I think that we could see these mistakes. Funds like we have probably propped up these companies to places that were, FOMO. Maybe right now I think we're at the, JOMO, joy of missing out. Like, we could look at deals that we passed on and be known for that, than not chasing shiny objects and investing in every transaction that came our way.
I'd love to know, what were the shiny objects that you're avoiding now?
I think it goes back to, chasing people and not deals. We definitely want to see, a whole due diligence checklist, but we want to see the industry. When we started investing, had a lot of friction. There was a lot of pain points. It was an early nascent industry. It was starved for capital and also starved for lack of capital. Where we invested was, technology, ancillary data companies, things that we believe that would be needed in what today is a cannabis economy, that would make it more efficient and effective. We stumbled a little because MSOs, growers, cultivators sell every gram they produce. So do they need something new? Do they need new, sodium lights? Probably not. Sorry if there's lighting companies here. But I do believe that, execution risk is always involved in any industry, coupled with what happens on federal and state levels, 280E, rescheduling, no access to capital markets and custody. So going back to what we look for, and again, I think now after seeing 1,000 companies investing in 20 odd, but writing term sheets for 50, that really the 20 fell out for due diligence, is wider aperture lens, still hyper-focused on management leadership, where their sales are growing, what revenue, quality of revenues, proprietary technology, customer support, customer buy-in, things like that, a growing pipeline of business. And again, I think that we could look at something in a different lens because of the companies that we've seen. So when someone says, well, this is new and this is going to be revolutionary, it might just be a product, service, and technology, but will never be a company because of lack of management.
Does anyone know the difference in margin, and it might be astronomical, between legal and illegal cannabis producers? What's the margin differential? Because people are trying to understand, why can't folks make money in this market? I mean, it's not the semiconductor industry. It's not the pharmaceutical industry. I mean, in many ways, the equation is much simpler and theoretically should be easier to get to profitability.
Well, in order to evaluate the margin on the state legal level, it really depends on the market. There's states where a pound of high quality cannabis is going for $600, and there's states where it's still going for $3,000 or $4,000 or even $5,000. So that's a huge factor, but assuming the market price is the same, the legacy operators are able to avoid many of the costs associated with licensing, the costs associated with compliance, including surveillance, seed to sale tracking, safety compliance testing, and on top of all of that, it requires paying taxes and paying egregious tax rates through 280E. So this is more a policy discussion, but I think regulators need to understand the additional costs incurred by legal operators, and if they want to see the legacy market be diminished, they need to do their best to try to make the process as cost effective as possible on these companies that are trying to do it right.
Do you think, let's just talk about brand and retail. Do you think that there's a Starbucks out there, right? I mean, you know, Starbucks basically went into a market that was as fragmented as possible. There was no barrier to entry and basically charged twice as much. And, you know, a lot of that was the customer experience. A lot of that was the quality of the product. You know, what are you guys seeing?
I don't think there's a Starbucks now. I think that's kind of, you know, in pitch decks that will be the Starbucks, the Amazon, the Uber of cannabis world. It's a challenge because, you know, state regulations, federal regulations and state regulations, you have to reinvent yourself in every state. I think brands for cannabis matter. I think that there really isn't, I don't think, a real national brand now. I think people know, you know, resonate, you know, look at, you know, what, I don't smoke cigarettes, but I know what a Marlboro cigarette pack looks like if I go into any state or any country in the world. But I don't think, I mean, Starbucks is a lifestyle brand. You know, to me, I don't think it's a coffee shop. It's so much more. I do believe that what you mentioned about elevating a retail experience is not in cannabis yet. I think people say that, you know, they're the Apple store on the retail side because they have iPads, but I think that there's so much more missing, and, you know, maybe a lot of it is going back to, you know, we grow and we sell and we cultivate, you know, and we manufacture and we sell everything, so we don't have to do better. But I do believe, like, going forward, there is going to be, you know, stores that matter based on, you know, location and based on brands that they might have. Certainly in nascent markets when there's not, you know, a culture you could, you know, smoke what's served. I think, you know, going forward that, you know, a brand play or a house of brands in certain form factors, people be loyal to that. And I do believe that, you know, the retail experience and holistically, the way that you shop and the way that you order and delivery and the way that you consume is going to matter in a crowded space.
David, going back to the international markets, what countries are doing it right?
Well, I think, you know, the way they're doing it right is the EU market. They're focusing on the medicine aspect of it, the EU GMP, the GACP cultivation. It's high quality, there's high standards, there's high barriers to entry to get the EU GMP. And I think, like Australia recently, shifted their focus July 1st to EU GMP only, where they previously were taking medicines that were GACP and bringing them into the market. So I think the European market has been, there's no hype. They don't fall, you know, we have a lot of hype here in North America about things, and I think what they've learned from us is not to be suspect to the hype. The legalization in Germany, nobody gives that much credibility. You know, the difference there is they're not chasing rainbows. They're not chasing rainbows of, okay, it's going to be rec next year, and everybody jumps into space and invests all this money. It's a more sober view of things. and not associated with the height.
So do you know, is it a smaller market because of that?
It's a smaller market. You can't count on, you know, the growth of patients, the doctor's familiarity with things. It's a very slow market. And in fact, in Germany, when the market started, the physicians had to exhaust all other remedies for a patient's condition before they prescribed cannabis. So if you look at the percentage of medical patients to the population, it's far lower than any state in the U.S. It's probably like 0.3%.
Right.
Yeah,
Right.
of the population, where in the U.S. medical markets that aren't really medical, like Oklahoma, it'd be 8%
Right,
of the
right.
population. So it's slow going, but it's a sober view of things, and eventually it'll take hold.
Do you guys have a view of what states are doing it best? What states are doing it right?
In considering which ones are doing it right, I think it starts with what the goal is. And in general, what I think the goal should be is offering the population safe and affordable products. And part of that is through dissuading purchasing through the legacy or illicit market. And so, although it makes it a much tougher place for operators and more difficult from the investor perspective, I think the states like my home state of Michigan that offered a lower barrier to entry for licensing, that they have seen the most success in diminishing the illicit market, while at the same time having a quick maturation cycle that's led to low prices and high quality for patients as well as recreational users.
So I missed that a little bit. So Michigan, what are they doing right? What are they doing well?
So what Michigan has done well is created free competition and low barriers to entry for operators, as opposed to states like New York that has created a much more complex and difficult process. So only $16.5 million in sales so far versus over $1 billion projected for this year. And as a result, for anyone that takes a walk down the streets of New York can see how the illicit market has proliferated. And I think if the goal is to offer this product to people in a safe and efficient way, then a free market to a certain extent has proven to be the best way to accomplish it.
Any thoughts, Brett?
Yeah, I think that it depends where you sit and what are you using as that metrics. Are you using, tax revenue? Are you using what Adam said as far as access to medicine, better pricing? I live in Florida. They have a very robust medical market, and that's another thing, medical rec. A lot of the East Coast states have made it tough to, acquire licenses. They're vertically integrated, which means, you're growing, processing, and selling. Florida, we sell medicine. There's dispensaries on street corners like we have a Walgreens or a CVS. People are getting medicine. People might complain as far as the pricing because, there's 22 license holders, and out of the 22, like 8 to 10 matter, and there's very, restrictive covenants around certain parts of the industry. Like in other states, they have the same way as planning and zoning, so to get medicine to the retail store, if a True Leaf opens, it's going to be tough for a Cure Leaf to open. But again, I think going back to where you sit and what you measure on, is it success of the MSOs in certain states, check mark for True Leaf in Florida. Is it getting medicine priced fairly? Probably not. I think Florida could change, or certainly adult use is coming on the market, but in free market states like was just mentioned, like Michigan, that's a total shift in paradigm for a medical market like Florida, where there is a moat around getting a license. They have to do everything, and having extremely amount of capital. It's capital intensive in states like Florida.
Right. Can we switch gears? David, can we talk about current yield in regards to folks that are either bond-focused investors or folks that are focused on cannabis, real estate investing, et cetera? Where do you think the best investments are if you're trying to get a coupon in the cannabis industry for 2023 and going forward?
Yeah, so we've taken a little different approach to things because the cannabis world, when you grow cannabis, the margins are great. But the problem is, in the last few years, the last 10 years, it's been a push model. So they grow cannabis, they grow too much, everybody jumps in, and they have the stuff rotting on the shelves. They don't have it sold. So we're approaching this like a pull model where you have it sold before you grow it. And that's where the yields, kind of work themselves out. So we're doing that in the EU GMP markets. We got a different model where we're building the facilities. We're getting the EU GMP certification. We're going to distributors and brands. We'll say, okay, distributors and brands, you're so great. Pay us a lease payment. We'll have our management company give you the EU GMP certification, okay? You pay us rent. We don't care if you grow a gram or 1,000 grams. You pay us the same rent. And we push it back beyond the pull model to distributors and the brands who flip the switch on. Because heretofore, the Canadians and even the U.S. markets, we tend to build, and once the prices are high, we build more, and then they get oversaturated, and we don't have any sales. So that's what we're doing. So the yields on what we're doing, we have to have these yields, is north of 24%.
Really?
For investors, yeah.
Wow.
Because
So just to simplify what you're saying, you're going in, you're getting EU certified,
EU GMP.
EU GMP certified.
Yep.
You are then approaching the growers and the distributors saying, I guess from a regulatory perspective and a real estate perspective, et cetera, produce all of your cannabis in our facilities. We'll make that part of it easy for you. And then, you can go out and
distribute your brand, or if you're a distributor, you know where distribution is. You're not overbuilding, you're paying rent, and you're getting the product.
So how are you getting 24% plus on that, which is incredible? Is it just because the margins are so high and it's a more conservative market?
Well, the problem always has been with cannabis, there's not a problem margin, okay? You can grow cannabis, even in Canada, cheap. But it's what you don't sell. So that's how you flip
Right.
the switch on it, right? You sell everything because you receive a rent from the distributors and the brands, as opposed to have to push it to the market and grow it and then hope you can sell it.
So one promise in the cannabis industry has always been, ultimately, it's going to be like the wine industry, right? Where, at least this aspect of it, maybe not what Adam's doing, but this aspect of it is, cannabis is going to be rated just like wines are rated. They're going to have their individual fingerprints, so to speak, their recipe and what people are looking for. Are they able to still do that? Are they able to still personalize their strain with your model?
Well, that's a great analogy, the wine business, because when I go to Wines or Us or whatever the hell it's called, and I buy these wines that are in Vivino, 4.0 or higher, okay? And I buy the wines that are a good price for a quality wine. So you got to be a good price. You have to have a quality product that competes in that segment where customers get value. And that's what's really going on internationally. You got to have a good product. You can grow stuff in Africa, for 5 cents, but it's not going to be quality product. So you have to have a good quality product for a fair price. and you have to beat out everyone else for cost. And we're dealing with an international market, so you have to be cost competitive on an international basis, and that's who's going to win. So what we're doing is we're growing in Colombia. Now, most people are surprised to learn that we grow in Colombia, but we grow indoors. Because of labor costs, we get high quality product. Outdoor growing is highly suspect to problems. We're going indoors with low labor costs. The average worker in Colombia is $252 a month for a cultivation tech a month.
Right.
And they're happy.
Right.
So there's cost competitive advantages there. There's lower utility costs. And we're approaching the market. Everyone else went outdoor and tried to grow in Colombia in all these different climatic zones and failed.
Yeah, there was a big public company. I think it was a SPAC that was growing there. I'm trying to
Clever
remember.
Leaves.
Yeah, right. Clever Leaves, yeah.
They're not doing too well.
They're not doing well.
No. Yeah.
Right. Fair enough. So interesting. What about you guys in regards to a search for yield? Yeah, you know, any advice for folks in regards to, you know, how they should think about?
Some people might not be aware that there are high-yielding companies on the public markets where a retail investor with a low capital base can still achieve high yields. The first one that comes to mind, a company like Chicago Atlantic, their yield, last time I checked, was around 13.5%. So it's also an interesting opportunity for people who are interested in having exposure to the upside of public companies in the cannabis industry, but can also have risk mitigation through being paid with those dividends while they wait on potential returns. And I also just like to echo the point on the wine model of cannabis, because certainly there's evolution of products in different form factors, and there's also different ways of producing cannabinoids like biosynthesis and inorganic synthesis. But in general, the human population has used cannabis for thousands of years, and there's a certain cultural relevance to it. And I think you're going to see the flower market in particular evolve between products that are lower price, more accessible, but also a segment of the more connoisseur products and brands. And certainly strains will be a factor in that, but also if the market ever opens up, geographic regions as well will play a role in connoisseur cannabis products.
Any thoughts on current pay yield?
Agree. I think there's, you know, when you want yield, you're giving up maybe some alpha and some risk capital. I think that you should look at constructing a portfolio. You know, the yield should be part of that. Pick your spots in public markets, private markets. Understand the risk tolerance. When you know, getting yield, you're probably getting some sort of collateral. I mean, there are a lot of, you know, real estate companies, private and public, that do pay, you know, extremely high dividends, you know, on par with other growth industries, but secured by, you know, certain asset classes. I do believe that you know, going back to, you know, where the industry is going on the brand side and wine industry, there is those, you know, you can't be everything to everyone. I think a lot of companies don't focus on the consumer needs. They focus on what they have and what they could sell. Price and potency seem to be a big issue in certain states and certain markets. Not looking for, you know, looking at genetics, looking at terpenes, looking at flavonoids. But I do believe, you know, moving forward, you know, companies focus on their niche. You know, there's, you know, $400 bottles of wines, $1,000 bottles of wine, and there's $20 bottles of wine. I mean, you can, you know, there is that market out there, but I think now people are focused now on, in certain markets, you know, price and potency, which is a challenge for, you know, people that are on the retail side, that, you know, took a great lease on a location in, you know, Aspen on Main Street, that people might go across the street to another store to buy cheaper product with higher potency.
I was a day one investor in one of the original largest cannabis funds. They're on their fourth or fifth fund now. and they are super excited about industrial hemp. And it seems like that's the hot topic, or at least the hot investment that people are pursuing right now in the cannabis space. So, Brett, I'm wondering, in a competitive situation when you're trying to put money to work, how do you convince the management teams that you're going to be the best investor?
Good question. Great question. I think that's a challenge. I think we always look at the portfolio companies or proposed portfolio companies. We would like to be partners with them. I think when we start out the journey on interviews, valuations, we're on different sides of the table, but in the private world that we've been investing in, we're totally partners. So, for us, again, different portfolio companies weighted to certain sectors, the issuer, the founder, that's their largest asset. That's all their net worth, hopefully, is tied up into that. We help fuel growth, amplify the story by looking at the industry and maybe in a different view, because it's not our first rodeo in investing and in deploying capital and building companies. I think that we look at companies that, we want to be built to last and become, like I said, become partners with a clear path to exit or some sort of liquidity event. If you, kind of stick to where industrial hemp is, or, we looked at that sector. I think hemp originally was kind of tied to CBD, and I think there's a lot more value in, the fiber, the seed, the material, but I think it's just so early and nascent that, it's going to take a bit of time. Down the road, I do believe that, it's going to be, a whole other sector for, biofuels, for concrete, and replace some other materials that are in the industry now in other sectors.
Adam, when you make an investment, do you demand that you have board representation? How do you look at, structuring an investment, be it, preferred, et cetera?
There's a variety of forms of risk mitigation, which is a big focus for us in any investment, particularly in cannabis. Board representation is one of them that we've been able to achieve in a few investments, and of course that allows us to have a seat at the table and be part of the decision making. And also, we have a big emphasis on preferred payback and liquidation preference, is making sure that the investors who have capital on the line are the ones to get paid out first, whether the business does very well or very poorly. And I think really the best form of risk mitigation is to do due diligence and have a quality company, an investable company. And in general, the management team is most important in any deal that we look at. But I think in cannabis, it's an even bigger factor because of how flexible the team needs to be, how regulatory change can happen so quickly, market dynamics are so fast. So we really focus 90% plus on the management team, because we understand that the market conditions and the business model and everything that we're modeling in the beginning could be very different from what the industry or that business looks like in a few years. And we want to make sure that we're investing in teams that are ready to adapt along the way.
Let me ask you about regulations. Is this an industry where there's only regulatory upside, meaning, 280E, safe, et cetera? Or, how do you assess the regulatory downside and maybe more onerous regulations coming in on a state-by-state basis?
Sure. So at the federal level, there's a lot of room for improvement, certainly. But there are, albeit unlikely, but possibilities in existence of negative impacts on the industry. For example, we're still waiting on the FDA or Congress to enact clear regulations around the over-the-counter market for hemp cannabinoids. And there's the possibility of those becoming more strict than the market currently has. There's also the possibility that through rescheduling, the federal government could take a more hands-on approach in regulating the industry and potentially making it more restrictive on states to have the right to create their own regulations and to implement them. And then at the state level, there's the possibility of it going in any direction depending on the state and depending on the market, whether that be license moratoriums that can create advantages for current operators but disadvantages for other operators, even down to the local level with municipalities enacting zoning regulations. Those could have a huge impact on businesses in the area, good or bad, depending on where their facility is located.
What do you guys think about the coming recession? I mean, there's definitely, it's probably, seems like it's going to be light, but you know, it might be here already. Is a recession good for the industry? I mean, obviously COVID was a tragedy, but it was actually good for the cannabis industry. So, you know, there's that side of it where, you know, in bad times, people probably are going to consume more. On the other side, I think in a recession, states are looking for more income, so they might be, you know, more business friendly. What's your calculus in a possible recession?
I think we've seen it happen. I think the ebbs and flows of the industry on price compression, on real estate site locations for certain dispensaries in certain markets. You know, I don't think I would say I would take a macro view on what a recession in the economy in the United States will look like. I still think it's super hyper-local because the business is hyper-local. You know, you're reinventing, you can't ship cannabis over state lines. So like Adam said, things like, you know, zoning pressure, retail pressure, supply pressure. I think that, you know, a lot of, when we started investing in cannabis, we looked at the asset class and we believed it kind of was recession-proof, you know, based on where we were going to put capital to work. I'm not sure that, you know, that's true. I think that the industry is in a lull because of, really not because of the macro view of the economy, but certain things that we need to happen, like in Washington, some, you know, small wins, which would be big wins for the industry. You know, things that were championed for, you know, since 2014, 280E, reschedulization, safe banking. On the recession, is the industry recession-proof? No industry is recession-proof. I think that there's, you know, we kind of might not fit into the mold of a certain sector of industry that's going to be impacted directly from a recession. Indirectly, 100% will be impacted.
David, our family offices love to co-invest with smart money, but it seems as though the institutional market, institutional capital has been alienated and, you know, has basically almost left the industry. What do you think it's going to take to bring them back?
I think the institutional market has lost trust in the business, in the cannabis business. If you talk to, I've, you know, talked to some SPACs, you know, about SPACing, you know, cannabis companies, European, and they're like, the guy says, you know, the biggest challenge we have is, I go to the, you know, the institutional capital, and say that's not an investable business, because the charlatans that came before have ruined all trust in the industry. So I think it's building trust back, focusing on fundamentals, and not, you know, chasing rainbows about what's going to happen and have some business thesis that's not realistic. The biggest business thesis that folks have sometimes is assuming that laws are going to change, legalization in the U.S. nationally, you know, everybody's going to sell to the U.S., or chasing rainbows for Germany rec before it happens. That's where we've gone wrong in the past. And I think the institutional cap is just, like, you know, once bitten, twice shy, and they're reluctant to come back in the industry. There's very little institutional capital in the industry right now.
Adam, I've been reading articles about fentanyl being injected into, you know, illicit cannabis. First of all, I don't even understand why that's necessary. I don't even get that really, but I would imagine also that that's going to drive people. That's going to drive people to buy legal cannabis. Do you have any thoughts there?
In general, fentanyl contamination in illicit products is usually the result of accidental cross-contamination. And I think it speaks to one of the core anti-cannabis messages, which is the idea of the gateway theory. And as counterintuitive as this sounds, I actually believe in the gateway theory when the product is illegal, because it's putting consumers in a position where the product that they're purchasing is being sold by the same individual that's also selling other illicit products. And it puts them in a position to be offered products that they wouldn't otherwise have access to. And I think the cross-contamination with those compounds is another issue that is resulting from the illicit market. So there's health and safety implications to diminishing the illicit market and bringing people into the legal market, but that's not easily accomplished through public relations and messaging and advertisement. The best way to do it is through simple economics, and that means offering the products through the legal channels at a higher quality and at a lower price, and allowing consumers to make that their own decision just based on what's available and where they can get a better deal.
I mean, I actually think, from a PR perspective, the whole fentanyl contamination is very good for the legalized cannabis market. I mean, it really does, scare the pants off people.
Certainly. I wouldn't wish a fentanyl exposure on anybody, and I'd prefer we find ways of bringing people into the market just by creating healthy and sustainable competitive markets within states.
So, last question. We have a presidential race starting to heat up. Who do you think is the most cannabis-friendly candidate? Or isn't there one?
No, I don't. I think that I don't think that it's really going to matter. I think that on the industry side, it's still, the House is divided. There's days that the industry goes up to Washington and lobby. I don't think it's when we started investing in the industry, we wanted, we expected and wanted Hillary Clinton to win. That's how far back we started investing. Thought it would be impactful for the industry, better for growth. Donald Trump wins, hires Jeff Sessions, and I think that everyone was like, "Oh my God, this industry's over." One stroke of a pen, we're all out of business. I think going forward that I thought it would be maybe it would be a Democratic play. I think it could be now a Republican play, but I don't think it's really going to matter what side and who's going to be elected. I think that the course of history has shown that we're just going to have to keep moving the ball forward to get some sort of less friction in the industry and some relief on the country level, on U.S. level.
I think we only have like 2 minutes left. Do you have any last words?
I would say on that there's no political will. We've been focusing on the same issues for 10 years, okay, or maybe less than that, but it's the same safe banking that doesn't get through. It's the same 280E. It's the same stuff, and nothing happens. So there's no political will.
Fair enough.
Nobody wants to take a stance and push things forward.
Right. Any last words?
I was actually in Washington, D.C. lobbying a couple of weeks ago with a focus on Safe Banking Act, which, although wouldn't have as much of a tangible direct impact on operators because there is generally accessibility to banking, I think it will have a monumental impact on the investor sentiment and boost the industry through showing that the federal government for the first time will acknowledge the existence of the industry and put in regulations to protect it and allow it to flourish. I think I'm more optimistic than most with safe banking. It's passed the House 7 times, and in the Senate, the key leaders who are blocking it are actually too pro-cannabis for their own good, which is why they wanted to see more added to the bill. So I think at the very least, with safe banking, there's high potential of that happening in the next couple of years. And I would just encourage for anyone interested in the industry, whether that be at the retail level or the institutional level, that if you have people on stage telling you how amazing of an investment this is and how great the returns are, it's probably too late. And I think the fact that investor sentiment is generally so low is what creates an opportunity to be a little greedy and capture these ground floor valuations.
Okay, we're out of time. Thank you very much.